The rise and fall of Tesla stock. Tesla is a household name, which is to be expected as they're the most prominent auto manufacturer by market value. The company was founded in 2003 by Martin Eberhard and Marc Tarpenning, and has grown to newer heights since Elon Musk became chair of the company. Tesla Inc. specializes in designing, developing, manufacturing, and selling high-performance, fully electric sedans, full-size sedans, and compact and mid-size sports utility vehicles. Headquartered in Austin, Texas, Tesla offers a broad range of vehicle services, providing vehicle body shops, charging stations, and service centers. It is also one of the world's most valuable automakers in the EV sector. The rise of Tesla stock. In June 2010, Tesla went public in an initial offering of 13.3 million shares at a public price of $17 per share. Tesla's stock trades under the ticker symbol TSLA. Tesla stock quickly became the stock of choice among investors. People who invested $1,000 in Tesla in November 2011 became more than $200,000 richer in 2021. The stock grew from less than $6 in 10 years to more than $1,000. This increase represents a 20,000% growth. To put it in perspective, a similar investment in the S&P 500 gave a 357.4% return. The 2021 rise came at the back of a downturn caused by the events of 2020. The recovery was so fast that it prompted many investors to bet against it or short it. Nevertheless, Tesla still reached the coveted $1.2 trillion market cap. At the end of the fiscal year 2021, Tesla announced that it made a revenue of $53.8 billion and a net income of $5.6 billion. The beginning of the fall. Tesla's meteoric rise continued in early 2022. However, on 1st February, Tesla announced a recall of nearly 820,000 vehicles, stating that the auto reminder to buckle seatbelts may be faulty. The cars recalled included the 2020 through 2022 Model Y, 2017 through 2022 Model 3, and 2021 through 2022 Model S and Model X. Less than 3 months later, the company announced another recall of almost 600,000 vehicles to disable the boombox function when the car is not packed, so it doesn't drown out pedestrian warning signals. The recall affected the 2017 through 2022 Model 3 and Model S, X, and Y, produced in 2020 through 2022. These recalls, coupled with Musk's $44 billion acquisition of Twitter and his dumping of Tesla stocks to fund his acquisition of Twitter, have contributed significantly to the fall in Tesla stock prices. Musk finalized his purchase of the social media platform in the last week of October and has taken to the site like a child to a new toy. His divisive views on Twitter have affected his brand and Tesla stocks. Since Musk acquired the social media platform, Tesla's stock has dropped over 12%. In contrast, the S&P 500 index has barely changed, and NASDAQ 100 index has less than a 2% decline in that same period. But not only his acquisition and focus on Twitter contributed to the decline in stock value. Tesla's stock price fall continues. Despite his statement that he will not sell any of his shares again, Musk continues dumping Tesla shares in the market. He has sold nearly $40 billion worth of shares. Nevertheless, the decline in Tesla's shares accelerated when the media outlets reported that Tesla plans to temporarily halt production at its Shanghai facility due to new COVID-19 cases among its Chinese workforce. Halting production at the Shanghai facility will significantly reduce output, as the facility is responsible for more than half of Tesla's electric vehicles in the first 3 quarters of 2022. Understandably, the news caused panic among investors. Days before the production cut plans in Shanghai found its way to the media, Tesla offered its U.S. customers who are willing to take delivery of its Model Y or Model 3 before the new year a whopping $7,500 discount, fueling concerns that demand is indeed dwindling. Musk blames interest rates for fall in stock price. But Musk is not moved. In a debate with a Tesla shareholder on Twitter Spaces, he insisted that the stock price fell due to increased interest rates and an uncertain economic environment. He argued that people tend to move their money from stocks to cash during economic uncertainty. Musk might be correct, but investors do not rely on Musk's analysis to invest and are bailing on the stock. Tesla's shares went down more than 40% in December. If the current trend continues, Musk's electric car company will end the month, quarter, and year on its worst record. Apart from 2016, when Tesla stocks recorded an 11% drop, the stock has been on the rise. Tesla recorded the worst decline among top automakers, even though General Motors fell 43% and Ford slumped 46%. Tesla's drop represents a 42% fall from their gains in late 2021. Having not fallen more than 25% in a single month, Tesla's 44% drop in December signifies its worst month ever. In the second quarter of the year, the stock dropped 38%. Analysts predicted a rise for it in the third and fourth quarters. However, the uncertain economic situation, coupled with Musk's selling of his Tesla shares and his antics on Twitter, saw the shares go down 59% in the fourth quarter, making it its worst period on record. Tesla not among top 10 EV makers. Tesla's market valuation fell to about $345 billion, remarkably below J.P. Morgan Chase & Company, NVIDIA Corporation, and Walmart Incorporation. This decline in share price also means that Tesla is no longer among the top 10 highest valued companies in the S&P 500 index. The electric vehicle manufacturer has been among the top 10 since 2020, when it broke into the benchmark. As if to worsen the situation, Tesla recorded a $720 billion loss of shareholder value this year. This slump in valuation meant that Tesla was among the most significant contributors to the S&P 500 decline in 2022. The company fell lower than Microsoft Corporation, Apple Incorporation, and Amazon.com Incorporation. Why did Tesla's stock price fall? Financial analysts are wondering what went wrong with Tesla. In 2022, Tesla was the most sought-after stock, toppling Apple and becoming the #1 stock for retail investors. This preference for Tesla stocks resulted in a more than $10 billion increase in investment. In 2021, retail investors spent $2.9 billion. That number increased to $15.4 billion in 2022. Elon Musk contributed significantly to this increase by sharing his idea of a world based on green energy where the burning of fossil fuels is relegated. His idea of making the world more energy efficient by not focusing on burning fossil fuels drew many supporters to him. He expressed his ideas through his Twitter page, which he used as his primary communication outlet. Musk's use of Twitter to convince new customers and sell his electric vehicles was so efficient that Tesla shelved any idea of making commercials. Musk's success in using Twitter is one reason he considered acquiring Twitter in a $44 billion bid. Musk admitted that he knew that he was overpaying for the social media platform, but said that the long-term potential justifies the price. Tesla's success was attributed to Elon Musk's genius, which raised no eyebrows when Forbes magazine named him the wealthiest man in the world. However, he lost that title in the middle of this year following the decline in Tesla shares. Initially, Musk tried to back away from the deal, but was dragged to court and made to keep to his word. Musk had to sell some of his Tesla shares to fund the acquisition. Although he has some backers, including Tesla board member, Oracle co-founder Larry Ellison, and a couple of commercial banks, he set off a series of layoffs, prompting lawsuits against him. Many investors worried that the Tesla CEO was being distracted by Twitter. And they were right to worry, as Tesla is now the fourth worst performing stock and is down 65% year to date. To put this in context, the market benchmark, the S&P 500, is down 19% year to date. Many investors saw this coming. They felt that Tesla is riding on luck and not on any real variable. Considering that 2020 was the first year Tesla made a profit as a company, yet its stock has been going up since 2019, you'll agree with the investors. Admittedly, Tesla made significant inroads in 2020 by expanding to Europe and China and launching 2 new cars. Shares in the stock market always go up and down, and Tesla's is no different. Tesla's shares have been overvalued for a long time. For instance, in 2020, Tesla stock recorded a 720% growth. In contrast, the stock market S&P 500 made 17% growth. Considering that the stock market is expected to produce 7 to 10% growth, you will understand that Tesla's growth is abnormal and unsustainable. Musk's popularity on Twitter helped push Tesla's stock, just as his tweets affected the price of Dogecoin. Nevertheless, Musk wasn't the only one that was extolling Tesla stocks. Several social media influencers and YouTubers have channels dedicated to Tesla shares, and they have viewers capable of investing in the market. These people also contributed to the popularity and climb of Tesla shares. Although Twitter was used as a tool to create awareness, which led to the rise of Tesla shares, it is now acting as a tool for the stock slump. Do you have another explanation of what could have caused the rise and fall of Tesla stock? Do not hesitate to share it here.